3 years ago, Bloomberg launched the Bloomberg Financial Services Gender Equality Index, which sought to quantify leading gender practices among financial institutions. This past year, we expanded the index to be sector neutral and really call out those companies that are leading in addressing gender equality in the workforce. Over 100 companies from 10 sectors headquartered in 24 countries and regions joined the 2018 Bloomberg Gender Equality Index, highlighting just how important this issue is across finance and industry alike. The 2019 Gender Equality Index survey is now open for submissions. Please visit bloomberg.com/GEI for more information. And now, to continue this conversation on empowering women, please welcome Nathalie Molina Niño, CEO of Brava Investments. Good luck.
Thank you. Hello. Wow, standing room only. All right. I have to say it's a distinctly special pleasure for me to be here because Seattle was home for me for 11 years. And it's a nice homecoming to be back, especially when your weather's decent. So I'm a recovering techie, and now I'm a full-time investor, and I focus on businesses that benefit women. My industry is often called gender lens investing. And despite what some of you might think, with all the headlines and all of the notoriety around the whole conversation around gender parity, we've actually been around for a while. In fact, Wharton recently did something called Project Sage, where they took inventory of the whole industry. And it turns out there's upwards of 50 of us, 50 businesses and funds that focus exclusively on investing in women. So there's enough of us to start to see a trend. And so I'm here to tell you about what I see and also to make a proposal. As a Latina who learned about entrepreneurship in the sweatshops of Los Angeles, and as someone who's really dedicated, at this point, my life's work to investing in women, I'm here to suggest, quite simply, that we've been doing it wrong. I promise myself not to depress you with too many statistics, but I think we can agree that we're not where we want to be. If we were, the World Economic Forum wouldn't be telling us that we're 170 years from getting to gender parity. We also wouldn't have half as many women in STEM as we did 30 years ago, which is where we are today. And we wouldn't have fewer women getting venture capital, which is the case. The numbers are actually dropping. So my proposal to you is that the problem is that we've been emphasizing optics instead of outcomes. And I'll tell you what I mean by that. I am seeing something totally different from what you're saying. That's always fun. All right. I'm going to just continue. So do you remember when Margaret Thatcher eliminated gender parity in the UK? Anyone? There's always one. Yeah, I knew it. There's always one in the room. Or what about the time that the United States became post-racial when Obama moved into the White House? No takers? Yeah. Or a little closer to home, when Marissa Mayer eliminated the gender wage gap in all of Yahoo when she took over. Yeah. So my proposal is that we have become distracted with tokens, which is to say the trappings of change without real, meaningful, sustainable outcomes. Sheryl Sandberg, for example, has spent the last few years telling us about the lack of women in the C-suite. She told women to lean in, and yet women of color are leaning in the hardest by all measures. They're starting more businesses than anyone else, they are graduating college at higher rates, and they're staying in the workforce longer. And yet they still represent only 3% of all executives in the C-suite. Women, we're told, are getting 4.7% of venture capital. The most recent stats actually have that down to 3%. But what people don't tell you is that that stat, as bad as it is, and as pathetically low as it is, it actually only applies to white women. If we look at the actual stat for women founders of color, It's 0.1%. That's where we are. So however honorable our intentions may have been over the last 10 or 15 years, I think it's time to take a really hard look at what the unintended consequences of our work are. And I hate to say this, and I don't make friends when I say this, but when we look at the actual outcomes, meaning the portfolio companies that we have been investing in, it would be more accurate to call the gender lens investing space a space that invests in white women in the corner office and not much else. So I founded my company, Brava, based on a theory of change that focuses on outcomes instead of optics. And I want to share with you the 5 principles that we use to follow everything that we do. And because you're investors or you're people who just care about this issue, I invite you to borrow anything from this list that resonates with you. And if anything does it, I invite you to blame our nice friends at Bloomberg. 1, investing in women has got to be equated with good business. If it's not lucrative, it'll never be mainstream. So we are unapologetically for profit, and we're about delivering market or better than market returns. And the reason for that is because I believe that anything less is philanthropy, which brings me to my second point. Women don't need charity. The economy needs women. $2.1 trillion will be inserted into the GDP if we tackle gender inequality. Number 3, there's no pipeline issue. There really isn't. Women control 70% of all household spending, and we're 51% of the US population. Finding companies that affect this constituency is actually not hard. And anybody that tells you that it is doing it wrong. Number 4, venture capital is not the only way. Some things in common with Al Gore's thoughts. As somebody who grew up her entire adult life in the world of VC-backed tech companies, I know that VC serves purposes, but I also know that we need more than one tool in our toolbox. VC, as Al mentioned, is rooted in short-term thinking and quick exits, which is usually not conducive for impact at scale. What's more, and this is the most important part for me, long-term, later-stage investing is where the real returns are. And anybody that doubts that or has an issue with that can take it up with the grandfather of my first investor, Warren. 5, investing in women should mean investing in all women, not just those in the corner office. We need all hands on deck, and to me, that means men. Not as allies, but as accountable stakeholders, which means investing in women should be measured, A, in the economic impact that a company has on women, and B, the number of women impacted, which is to say, go big or don't bother. You may have noticed that there is one thing missing from my list, and it's not missing from anyone else's, but that's what makes us unique. And that is that we don't care whether a woman is in the corner office in our investments. And I have to tell you, as a woman in the corner office, trust me when I tell you it's not that I don't care. It's that we have more urgent priorities. I'll give you a real-life example. Nearly every fund that says that it explicitly focuses on investing in women requires that women be on the founding team, meaning that they would likely invest in the next Tory Burch or maybe the next Spanx, but they wouldn't give the time of day to some dude who cures breast cancer. I'm sorry, but that's not how we win. Nor is it how we make sustainable impact at scale. So at Brava, we are less concerned with creating the next woman billionaire than we are at raising up 1 billion women. I think every investor is an impact investor. There, Al and I might diverge. Every investment is going to make an impact, whether it's negative or positive or neutral. We're making an impact every day with every penny that we spend or we invest. So my proposal to you is simply this. Women, especially women at the base of the pyramid, cannot feed themselves with tokens. They can't pay their bills with symbols. So if you want to be in the smart, lucrative, sustainable, and in my opinion, highly accessible business of investing in women, I think it's time for all of us, not just my company and not just me, but I think it's time for all of us to look beyond the sexy headlines and the pink logos and the stories that look really good in our annual reports, and we start focusing instead on investing in outcomes, not optics. Thank you.